Good evening, everyone. Welcome to the official YouTube channel of Officer Saturday 24/7. So, how are you all? Let me know. So, those candidates who have joined us here, let me know how are you all. And audio, video, both are okay or not? Let me know. So, let's start the session. In this particular session, we will be discussing about IFS. So, as you know, we have already started the Achiever series and we have also started the Achievers batch. So, from 8th of December, I and Vishal sir, we both have started your new Achievers batch for May 2024, in which IFS orientation class happened on Saturday, and the next class will be on Monday. That will be your first demo session. It will be available on Office Saturday 24/7 YouTube channel as well. And from Tuesday onwards, you will not be able to see any demo on the YouTube, and that will be in the paid classes only. So if you're thinking about enrolling in a particular paid batch and you want to check the demo for the same, you can check on Officer Saturday 24/7 on Monday 9 to 10 p.m. Okay, that's the Achievers batch we have launched. So let's start. As you all know, we have started the Achiever series. Every day we are discussing one particular question, particular module of you from each and every unit perspective. It means every day we are covering one particular topic of all the topics of your module A. So right now we are covering module A, then we will cover the module B, then C and D. This is how we are going to cover all the 4 modules of your every day by covering one particular unit. Okay, so this is what we're talking about your today's session. And every day, as I have tell you, like what topic we are going to discuss today. So today's topic is your globalization impact on India, and that's the unit number 6 of module A. Now, before moving towards the session, first of all, these sessions for IFS English Medium will be available Monday to Saturday only on Officer Saturday 24/7 in the evening at 7 p.m. Okay, so these sessions will be available at 7 p.m. Monday to Saturday. If you haven't seen the earlier sessions or the last 5 sessions, if you haven't seen them, do check the playlist. You will find the playlist, and there you will find each and every session recording as well. Okay, so let's just start. So today's session is globalization. So before discussing questions and before moving towards the globalization topic, let's discuss first something about economic reforms, because globalization came from the economic reforms only. So if I'm talking about economic reforms, the last economic reform or the new economic policy of our country was introduced in 1991. That was the LPG, liberalization, privatization, globalization. When we talk about liberalization, it means what? Liberalization means to remove rules, regulations, restrictions. Privatization means to transfer the ownership of public enterprises to the private enterprises. It means government's ownership will be transferred to the private ownership. And the globalization means to link your Indian economy with the world economies. It means we are starting the dependency on the foreign market, because in the globalization we have started to do export and import with all the countries. Okay, so this is the LPG. But now why we have introduced this LPG policy? What was the reason? And the reason, there were a lot of reasons. Some reasons we are discussing here. The first, on the government of India, there were a lot of borrowings burden. So as we know, every year government makes a budget in which government estimates what will be the earning of the government for the particular financial year and where the government have to spend that money. We discussed this. But when we talk about government's budget, every year we face the deficit budget. Deficit budget means every year the expenditure of government will be more comparative to the revenue of the government, and that's why government have to borrow money for the development of the country. And because we are developing country, that's why every year we face the deficit budget. And when the government borrows money, we have a lot of sources from where the government can borrow money. Government can borrow money from RBI, government can borrow money from the international organization, government can borrow money from the foreign countries, government can raise capital by issuing the government securities. So these are the ways from where the government earns money, or not the earns money, but take money from or borrow money from the market. Now, after taking all these sources to raise the capital so that the country's development will not stop in a particular financial year, in the year 1991, we have seen that government was in the major burden of the borrowings, and government was not capable at that point of time to repay those loans from whomever the government have taken. So the first reason why we have introduced the LPG policy or economic reform was your fiscal deficit, the burden on government of India of the borrowing. The second major reason was inflation was rising. Inflation is what? It is rise in the prices of goods and services. When the prices of goods and services are keep rising, that is known as inflation, and that was happening in that financial year 1990-1991. And we have seen that government of India was not, or government of India and RBI, they both were unable to control the inflation from that at that time. So this was one of the reasons. Apart from that, we have already faced balance of payment crisis. Now, what is balance of payment crisis? It means whatever transaction India is happening with the other countries, with the rest of the world, in those transactions, we have faced that the government, or we can say the country was earning less amount of money and was spending more amount of money in the foreign markets. So the outflows were more than the inflows in the balance of payment. Okay, the outflows were more from the inflow in the balance of payment. So that's why balance of payment became adverse or negative, or it was the balance of payment crisis. After that, we have seen Gulf War was there. Because of the Gulf War, crude oil prices was continuously rising, and it created a certain inflation in the country. It is one of the reasons why inflation was there. Because India is a kind of country which imports major part of its crude oil. And that time was the same, and still in the present we also dependent for the crude oil on the foreign market, and because of this a lot of foreign currency or lot of outflow from India have been seen. And because of this Gulf War, India's foreign currency was reducing, and India's foreign currency was remained only for 2 weeks, it means for 14 days. So it have been said that after 14 days we will not be able to pay our import bills. It means we will not be able to purchase the crude oil, and if you are not able to purchase the crude oil, how you will run your country? So this was one of the reason that foreign currency reserves were falling. And then we have seen public sector undertakings were not performing well. They were not having financial help from the side of the government. They were not able to generate the jobs. They were not able to produce the goods and services. They were not able to provide salary to their employees. So all these situations have been seen, all these problems have been seen in the Indian economy from 1990 to 91. And after facing all these issues, then in the last, we went, it means the country's government went to the World Bank and IMF for asking the help. And when we went to the World Bank and IMF for asking help, so that we do not have to be known as a bankrupt country, so they have put a condition in front of the government that if you want us to help you, we are definitely there for you, but you have to introduce the reforms in the economy, and those reforms have been named as economic reforms. So IMF and World Bank said that we know if we provide India a loan right now without any condition, after 10 years India will stay at the same position, because not only they are using their resources, but also they are not letting others to use their resources. So that's why they said that if you want us to help you, you have to introduce the economic reforms. And that's why we have introduced the LPG policy. Clear? Now, first one, we have liberalization. Now, what is liberalization? Liberalization simply means to remove rules, regulation, restriction. License, permit, quota raj have been removed. Then privatization, the public ownership transfer to the private sector. And globalization, we have made economy open for all the export imports from the country. It means we have linked Indian economy with the world economy. Okay, so this is the economic reforms. And because of the removing rules, regulations, restriction, and because allowing the private sector to work in the country, we have seen the evolution of globalization. Now the MNCs are ready to come to India. They wanted to come to India, then start their business here. They wanted to invest their money in the country. Because as a consumer market, if we see, India is the biggest consumer market. And right now in 2023, if we talk about, we are most populated country in the world. We have left China behind. So it means as from the side of the consumer market, India have a big opportunities. So the companies wanted to invest in India, and because of the liberalization, privatization, they were able to come to India, and that's where the globalization has started rising. Clear? Now, this was all the introduction of the chapter. Now, let's move to the questions. And I want each and every one of you to be active in the session, keep answering the questions here. And as well, apart from this, Do let me know in the comment section how many answers you have given correct after each and every session of you. Okay, so let's just start. So first we have here that is talking about which among the following statement is not true for globalization. The statement not true for globalization is, first is saying workers were denied for their rights because labor law were not implemented. Second is saying it helped in creating several jobs in the service sector. Third is saying people having implemented. Second is saying it helped in creating jobs. Okay, third is saying here that people having wealth, skills, education were not benefited from globalization. Globalization has unequal benefits. So if we talk about the globalization, so the fourth statement is totally true. Reason? Because actually globalization have unequal benefits. Because of the globalization, we have allowed that MNCs can come to India and start their own business. But what happened here in the globalization, we have seen the companies are coming to India. They want to be in the urban areas. They want to be in the metro cities, but they do not want to involve in the rural area. So that's why unequal benefits was there. And the second one is also true. The service sector got the several job opportunities, and if any sector got maximum benefit out of the globalization, that's the service sector. Okay, and the least benefited sector is agriculture sector. So second is true. First is saying workers were denied for their rights because the labor law were not implemented. This is also true, but this is not true that people having the wealth, skills and education were not benefited from the globalization. Everyone got benefit from the globalization, but only the difference is some got more benefit, some got the less benefit. So right answer here is C. Okay, next. Which among the following is not a benefit of your globalization? Not a benefit of your globalization. So we know globalization is simply to link Indian economy with the world economies. First is saying you will get the technical advancement because the technology transfer is there. Job creation, political stability, economic development. So out of these four, according to you, which of the following is not a benefit? So it's very obvious. You will get technical advancement, you will get the better jobs and the jobs more opportunities, and economic development will be there, but not the political stability. Globalization cannot control our country's government. So it means political stability is not one of the benefit of your globalization. Okay, just give me a minute. So right answer will be your C. Next question we have here that is asking that globalization helps in ensuring various economic and social benefit to. So it is providing various economic and social benefit to whom? Laborers, consumers or producers? So laborers, producers, consumers, who are getting the maximum or who are getting the economic and social benefit because of the globalization? And the answer will be all are getting this benefit. Hana, answer is all the three are getting benefit out of your globalization. Okay, now next question we have, globalization caused dash. First, easy movement of goods, capital, services. Second, increasing the international trade. Third, companies easily operating in various countries. So what do you think, which of the following is the globalization caused? So if we talk about because of the globalization, it's very obvious the international trade increase, because the globalization have given us the authority to perform export import, and globalization made Indian economy an open economy. So second is true. Easy movement of goods, capital and services, this is also true. After the globalization we are able to perform this. Companies easily operating in various countries, this is also true. It means all are the correct answer, or all are the causes that have been seen because of the globalization. So right answer is D. Now, next is asking here, which among the following is not a protectionism measure? So, first of all, when we talk about globalization, a lot of benefits are there because of the globalization we have faced, but there is also disadvantages. There is advantages, but also some disadvantages are there, Because of the globalization, a lot of Indian Indian businessmen are facing loss. Their businesses are not going well. They are not able to increase their customer base, and apart from they are losing their customer base because now people are approaching to the MNCs, people are approaching to the foreign brands. So your domestic businessmen are facing loss. And in this situation, what should be done? So WTO said, that is World Trade Organization, like if because of the globalization, any country's government feels like that this is not in the national interest, whatever happening because of the globalization, whatever the impact of globalization, if the government of the country feels that this is not right for the nation's interest, then you can have your own measures, you can implement your own measures to make it right for your country. And those measures that Indian government have taken, that named as a protectionism measure. Okay, and what actually we are trying to do, we are trying to save ourselves from the globalization's disadvantage. We are first trying to remove the dependency on the foreign market. So what happened in the globalization? We started interaction between the countries. We have allowed the cross-border transaction of goods and services, of knowledge, of skills, of culture, of people, everything, of resources, everything. We started doing cross-border transaction. Now we are restricting this cross-border transaction, and this process is known as deglobalization. When you are decreasing your dependency, when you are decreasing your interaction from the foreign market, that is known as deglobalization. And how to do that? With the help of protectionism measure. And there are three measures that will be taken. Increase tariff barriers, like taxes, duties, etc. you have to increase. Import quotas, put certain quota limits on the imports. Then non-tariff barriers. Non-tariff barriers means rules, regulation, restriction can be put. Like if you want to come to India, you have to take permission from 3 ministries and then from the 3 next departments of a ministry. So it will become more kind of task for the MNCs to come to India and take a permission from different departments. So that's the non-tariff barrier. So all these are the protectionism measure, but not the fourth one, that is talking about increased capital account convertibility. Okay, so right answer is D. Next. Which sector experienced the least profit due to the effect of globalization? Achha, I have just answered this question. I have already answered this question. So the maximum profit have been seen in the tertiary sector and the least profit have been seen in the agriculture. Okay, now, so right answer is C. Next we have opening and improving the economy with other major economies to take it to the international level is known as privatization, liberalization, globalization, none of the above. So when you open up you are opening your economy, you are improving your economy. With what? With the major economies. That is what it is to the international level. You are doing. So that's obviously a globalization because you are opening your economy. You are improving your economy to with the other economies at the international trade. International level. So that's the globalization. Next, the process of reducing dependency and integration amongst particular units throughout the world is. So if you are removing or not removing, actually reducing the dependency on the foreign market, reducing the dependency on the international market, on the other countries, what actually this process is known as, and I have told you this process is known as deglobalization, right? This process is known as what? Deglobalization. So right answer will be D. So reducing your dependency, reducing your integration, that is your deglobalization. Now what are the benefits of globalization? Out of these, what is the benefit of globalization? Use of innovation and technology, low production cost, get access to various new cultures. So which of the following is the benefit of globalization? And the right answer for that you will find is all of the above. You are getting low production cost, you are getting various access to the various cultures, you are getting innovations of technology as well. So all are the benefits of the globalization. All these will be seen because of the globalization. Now next, what are the challenges of globalization? The challenges we are facing in the globalization. First is saying the exploitation of foreign workers. Second is saying difficulty in the expansion of MNCs. Third is saying high charges and export taxes. So out of these three, what do you think? What are the challenges of globalization? A, B, C or D? Okay, so first it's very obvious the foreign workers will be exploitation can be there. And these are the challenges we can face when you are going to the other country. And difficulty in the expansion of MNCs will be seen. You will see the high charges and export taxes. This is also one of the challenge, like you came to India, let's say foreign company came to India to start their business. But when they are exporting goods and services, the government policies have been changed and the government is implementing more taxes now. So it's very obvious it's a challenge for the MNCs. So right answer is D. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, those candidates who have joined us here in this particular session, do let me know how are you all, and let's start the session. What actually we are doing in this particular session, I will let you know. First of all, this is our Achiever series, and this time 7 p.m. is book for your IFS Achiever series, in which we are discussing one particular topic every day in form of important MCQ. So if you haven't seen these sessions, first of all, do check all the sessions which are available in the playlist. You can watch in the recorded form. And do make sure from now onwards you join at 7 p.m. for IEIFS and 6 a.m. for PPB. So I will be your mentor for IEIFS and PPB, both the subject for your JAIIB. And we here are preparing for your JAIIB May 2024 paper. Okay, so let's start the session. So this is our Achiever series, and today we are going to discuss the class number 7. In class number 7, module A we are discussing, and the topic that is there in the class number 7 is economic reforms. So module A, unit number 7 it is the economic reform. The total modules you have 4, and total units you have 45, out of which 11 units you will find in your module A. Out of that we are discussing 7. So you can see we are going to complete module A in next 4 days. Okay, so do make sure you have checked all the sessions. That is very much important. Now let's start the session. Now today we are going to talk about the economic reform. So as usual, first we will discuss about this particular topic, and then we will move towards the MCQs, so that you will be able to link the content with the MCQs. Okay, so let's start. Now when we talk about the economic reforms in the globalization chapter, I have already talked about economic reforms with all of you, in which we have discussed what is liberalization, what is privatization, what is globalization, what are the different aspects. We have seen advantages, disadvantages about globalization we have discussed. In this particular session, we are going to discuss about all the economic reforms. So as I have told you in the last session, unit number 6, globalization, that why we have introduced economic reform, because there are 6 to 7 problems which India was facing. Out of them, we have seen that fiscal deficit was increasing in the country. It means the burden on government of India of borrowing was increasing, and government was not capable at that time to repay that borrowing, repay that loan. Second, we have seen that the country was facing extremely high inflation, and that was at the warning stage. So we were facing inflation at the warning stage. That was another issue we were facing. The third we have faced was here the increase in the increase in the outflow from the country. It means in the balance of payment, the outflow was more in comparison to the inflow, and because of that the balance of payment crisis have been seen. And because there was balance of payment crisis, the other things was also there, like we were seeing that regularly the foreign exchange reserve was declining, it was falling in the country. Regularly we were seeing that the foreign exchange reserve is falling from the country. It means we have seen that we only have 14 days foreign exchange reserves. After 14 days we will not be able to repay our, or not repay, to pay our import bills. So this was the major issue we were facing. After this, we have also seen that the public sector undertaking were facing a very difficult time for providing job opportunities in the country or providing salary to its employee. Apart from that, there was also an issue that we were facing at that time, that our gold reserve was also declining, because while we were taking loan from the World Bank or other institution, we have to give something in the security, and the gold reserve was used for that purpose. And all of these came together, and that's why Indian economy was facing a crisis in the economy, and that's why Indian economy, or I can say the Indian government, went to World Bank and IMF for the help. And there they have put a certain condition in front of the government that yes, India will get loan or will get help from us, but they have to introduce the new economic policy. They have to reform their economic policy, because according to World Bank and IMF, whatever economic policy India was using, that was not sufficient for India to grow in the next 15 or 10 years. So that's why, because if we talk about IMF, it is International Monetary Fund. It provides loan to the member countries in case of economic crisis, in case of your balance of payment crisis, as well as it provides ideas, suggestions to the government of your country, in which, or the central bank of your country, in which IMF makes sure that the country will not face any kind of instability in the economy. And that's what we have seen. That was we were doing at that time. So IMF have seen the study, have done the study on the Indian economic policy, and said, if we are going to help you out, you have to change your economic policy, because IMF knew that if we will give loan India today, after 10 to 15 years, India will be at the same situation and won't be able to return our money. So that's why the economic reform have to be introduced. That was the suggestion of IMF. And as we had no choice, we have introduced the economic reform. That was the LPG. So LPG stands for liberal. I know you all know about the LPG. We have discussed a lot of time. Liberalization, privatization, globalization. Liberalization means to liberal the rules and regulations and restrictions from the certain different sector of the country. Apart from that, liberalization made the license, permit and quota raj a thing of past. It means some times ago it used to happen in the country. The second, privatization, means when you transfer the ownership, the management, the control from government to private sector. It can be partial transfer, it means 50%, 49%, 70%, whatever. Or it can be fully transferred, it means 100% ownership, management and control. So this transfer from public ownership to the private ownership is known as privatization. And because of the privatization, India became mixed economy, because government and private sector both are working together in the country. Third, we have our globalization. Now, what actually the globalization is? Globalization simply to link Indian economy with the world economies. We started linking Indian economy with the world economies, in which we have seen that the government have provided the permission to do export and import from India to abroad. It means kind of economy we have seen India to build, that there is no restriction in the export and import of the country. And because of this, India right now is known as an open economy, because we have provided permission to do export and import. And this is the LPG, this is the economic reform. It's not like when we have introduced the LPG policy or economic reform, India got only benefited out of it. No. A lot of disadvantages are there, as in globalization chapter. If you remember in the last session, I have discussed with all of you, the globalization somehow was affecting the Indian economy. And that's where the WTO said that if you think that these rules and regulations or the globalization is not good for your national interest, you can introduce your own measures to control these kind of things. And then India introduced the protectionism measure. Okay, and if you know what are those three protectionism measure that we have discussed in the last class, do let me know in the comment section. Okay, that's a kind of homework for you, I can say. So in the comment section, let me know the 3 protectionism measure that India was introduced to reduce the disadvantages from the globalization. Okay, so that you have to answer. So let's start. This is our introduction of the chapter. Now let's start with the form of MCQ. Before starting here, do also make sure that you are being active in each and every session and keep answering Whatever you think is the right option in your comment section. Okay, or in the end, do let me know what score you have got in this particular session. So let's start with the first question, that is asking about what were the reason for introducing economic reforms in 1991. Why we have introduced economic reform in 1991? The reason it is asking. First is saying the Gulf War, second is saying the negative balance of payment, third is saying increase in fiscal deficit. So out of these three reasons, what you guys think? Which of the following is the reason for your economic reform introduction? So I've told you there was an increase in fiscal deficit, there was a balance of payment crisis, it means negative balance of payment, and there was a Gulf War. Because of that, the crude oil was becoming costlier for the country, imports became costlier for the country, and somehow we were not able to maintain our foreign reserves. So right answer is all of the above. It means D is the reason why we have introduced the economic reform. Okay, next question. Next question is asking about the the process of transferring the ownership, management, control of a public sector partially, entirely to the private sector is known as. I guess I have told you about this already. Hana? The process where you transfer the ownership, the management, the control of your public sector undertaking to the private sector. It is known as what? Globalization, liberalization, privatization, and or none of the above. So I guess that's a very simple question. Right answer is privatization. Okay, right answer is your privatization. Next question we have, which is not one of the primary pillars of 1991 economic reforms. Not a primary pillar. So 1991 economic reform, you can call it economic reform, you can call it new economic policy, you can call it LPG policy, you can call it free market economy, whatever you want to call it, all these are the same. And which of the following is not a part of your economic reform? That is automation. Liberalization, privatization, globalization is there, but not the automation. Very simple question. Again, one of the simple question, which of the following concept was not a part of your economic reform under the new economic policy 1991? Centralization, liberalization, globalization, privatization. So which of the following is not a part of economic reforms? So economic reforms, we have seen a lot of economic reforms reasons, and what economic reform we have seen, that also LPG, out of which centralization is not a part. Centralization is a kind of power in which, or kind of method of doing economic planning in the country, that used to be done by planning commission. So in the planning commission, what used to happen, top to bottom model was introduced. At the top, central used to make planning, and all the state and union territory have to follow their planning. And state and union territories, they do not have any kind of option that they can give their suggestions, or apart from that they can give any kind of feedback to these kinds of things. There was nothing like that. So they just have to follow the rules or the policy that the central government had made, and that's what is known as your centralization power. And what Niti Aayog is doing, that's a decentralization. Why? Because the states and union territories heads are the member of governing council. They tells the central what they tells the Niti Aayog what they are looking for. Accordingly, the plan will be made. So bottom to top level, it is the planning of Niti Aayog now. Which of the following has occurred in India after its liberalization economic policy 1991? So which of the following situation have been seen in India after LPG? First is saying share of agriculture in GDP increase, share of India's export in the world increase, FDI inflow increase, India's foreign exchange reserve increase. So what do you think, which of the following is correct? The situation that we have seen, the situation that we have seen in India. Share of agriculture in GDP increase. This is, see, if we are talking about after liberalization, what we have seen, so this is very true, FDI was increased. And in the globalization chapter, I have told you that because of the inflow of the capital, maximum ownership, not the ownership, but maximum benefit have been seen in the which sector? In the service sector. And the least benefit was agriculture sector. So agriculture share was reducing, not increasing. So this is not true. FDI inflow is true, foreign exchange was true because the export was increased. And that's why the right answer will be your second, third and fourth, and the option number B will be correct. Option number B will be correct. Okay. Now next. Narasimhan Committee on Financial Sector Reform is related to which sector? So we are talking about Narasimhan Committee. This is a very important committee. Definitely the question will be seen from this committee. First of all, Narasimhan Committee 1 and 2 you have to study in your module C, unit number 1. That is Indian financial system. Okay, that you have to cover. Now, if you're talking about Narasimhan Committee on Financial Sector Reform, it is related to which sector? It is related to banking sector. A lot of reforms in there. Here you are just reading what was the sector for which the Narasimhan Committee have given the recommendation. So a lot of recommendation have been given by Narasimhan Committee. And the second thing you can see that a lot of recommendation have been accepted by government. So whatever the recommendation have been given, they have been started in a certain measures by the government. So right answer is your banking sector reform have been given. Like one of the reforms recommendation it has given that do decrease the CRR and SLR. Do increase more supervision on the commercial banking system. Do introduce the private sector banks so that they will be able to have a healthy competition. All these kind of things have been introduced. So right answer is B. Next. What was the primary outcome of liberalization and privatization initiative under the new economic policy in 1991 followed by the Indian government? So you have to answer here what was the primary, what was the primary outcome? So you know, because of the liberalization, a lot of rules, regulations have been removed. Okay. Second thing, because of the privatization, we have allowed private company to work in the country. So because of these two, what have been the initiative that have been there? That is globalization. Because of that, we have find out the globalization have been done in the country. So right answer is your B. Next. Which of the following arguments are made in favor of privatization of a country's economy? The argument made in favor of privatization of country's economy. It helps to revive sick public sector unit. It creates a competitive environment for businesses. It helps to protect the sovereignty of consumer. So what do you think? What was the reason why we have done the privatization? Like if we talk about the present, if a government allows that this company will be private, going to the privatization, or government is doing privatization of the banks, this creates a very bad image of the government. Like it means government is not capable of running its own companies. So it is giving that companies to the private sector, and that's true. That's what the government do. And this is the best way to revive the particular public sector unit. This is true. And that's why the privatization have been done or have been allowed. It creates a competitive environment. That is also true. It helps to protect the consumer sovereignty. That is also true. It means right answer is D. So all the points that have been given here was in the favor that yes, we should do the privatization in the country, and that's why we did the privatization. Okay, because at that time government was not actually capable, because it do not have the capital to run these sick units or to give employment to the country or to make sure that the work should be done on a time. That was not there in the country. That's why the private sector was allowed to come into the business. Now next, what is the full form of LQP system that existed before onset of the new economic policy? So earlier, to start any business, the certain restrictions used to be there. To start any business, the certain restriction used to be there in the country, and because of that, the liberalization process have been done, and the liberalization had made the rules, regulation, restrictions easy. Now it is easy to start your business in the country. Now it's easy to work in the country. So now you have to answer LQP system that used to be there. It used to be a thing of past now, that was removed because of the liberalization. It was what? And the right answer for this will be your license, quota and permit. So now the license, quota and permit Raj became a thing of past in India because of the new economic policy. So right answer will be your A. Before starting business in India, we used to have the license from the certain department. You have to take permission and they will give you the license. Then the quota have to be given. Like once you have got the license, after that they will ask you that this is the quota for you. This is how much you can produce. This is how much you can do. So quota Raj was there. Permit Raj was there. After taking license, you have to take the permit as well. So this became a thing of past now. So right answer is A. Okay, 1 second. Now, next question is asking which of the following was not a part of the structural adjustment program under the new economic policy. Not a part of, you have to answer. Which of the following was not a part of a structural adjustment program? Fiscal reform, tax reform, balance of payment adjustment, industrial reform. A, B, C or D. And the right answer will be here. It was not including the balance of payment adjustment. So which of the following was not a part of a structural adjustment program under NEP? It was balance of payment adjustment. Okay, right answer is C. Good evening everyone. Welcome to the official YouTube channel of Officers Survey 24/7. How are you all? So first of all, let me know is audio, video both are okay? Are we good to go? And as you know, every day at 7 p.m. we are meeting for your IFS session for English medium candidates. It means these sessions are helpful for those candidates who want the content, who want the questions and explanation, everything in English. These sessions are for them. If you are looking such sessions, that will be available on Officers Survey 24/7 for all the 4 subjects of your JAIIB, as well as all the 4 compulsory and the 1 elective paper of your CIP. So both languages are available in this particular channel, and this is your IFS session at 7 p.m. for English medium candidates. And if you want the same session for IFS that you will, for PPB, that you will find in the morning at 6 a.m. Okay, so to check these sessions out, if you are new to the channel and first time you are joining these session, do make sure you check once the playlist. In the playlist you will find all the recording of the session, because as you can see today it's our 9th class. So if it is our 9th class, already the 8 sessions have been done. And to check the recording of that, do make sure you check the playlist. So let's start here. 1 second. Okay, so what we have to do here, first of all, this is our 9th class of module A. Every day we are discussing one particular chapter of your, and this is your module number A, unit number 9. So what is the name of the unit? This is your International Economic Organization like World Bank, IMF, etc. So first of all, this is from your module A, unit number 9. If I talk about module A, you have total unit 9, and you can see, unit 11 units. In module A, you have total 11 units. Out of that, we are discussing 9th unit today. And apart from that, if you haven't seen the earlier 8 session, do check the playlist. So let's start. Before starting the session, I will be your mentor for IFS and PPB, both for the JAIIB preparation. Okay, so before moving towards the questions, as you know, every day we discuss the certain number of questions about your topic. So before that, let's understand what actually this international economic organizations are. First of all, whatever India is right now, it's not only because India have been always a self-reliant economy and was working itself for each and every development of the country. It was not like that. India have taken a help of a lot of countries as well as the international organization. If you remember unit number 6 and unit number 7, when we have discussed globalization and economic reform. So in the year 1991, India was in the situation where India will be declared as your bankrupt nation. But who saved India from being bankrupt nation? World Bank and IMF. India got the status of junk nation. It means the junk status have been given to the India by the international credit rating agencies as well as the India's credit rating agency. We have got the junk status. It means investing in this country is risky. Do not invest in this country. If you do, you will lose your money. So such kind of situation we have seen India have faced in 1991. So who helped India to overcome that situation? World Bank and IMF did. So the growth India got right now, and India right now is known as the fastest growing economy in the world. It is all not only because we always been self-reliant. No, we have dependent on other countries as well as we have been dependent on these international organizations as well. So World Bank, IMF, WTO, ADB, there are a lot of development banks or the international organization which helped us actually to become what we are right now. Okay, so that's what this chapter is talking about, like how India got help from different international organizations and how these international organizations help India to achieve its status. Okay, so let's start. First, let me talk about what is World Bank. So World Bank and IMF, they both are known as twin sister organization. Why they are twin sister organization? Because they both have been started together. Now, apart from that, why there was need to develop World Bank or to develop IMF? The need was there because first, after the World War II, we have seen the global financial system was not working properly and it was totally destroyed. So the USA said that we have to rebuild our global financial system, and to rebuild our global financial system, the USA have created a conference, has not created but have conducted a particular conference at Bretton Woods. So the name have been given Bretton Woods Conference. Now in this conference, a lot of delegates from the country have come and they have talked about this situation, and after the conference have ended, they got into a certain suggestion, or I can say the certain result, in which they said that we have to introduce the certain international organization which are definitely going to help us to have or to rebuild the global financial system. And after this conference, the 4 international organizations have been created, out of which one was World Bank, second was IMF, third was GATT, and the fourth was fixed exchange rate system. So these 4 international organizations have been introduced after the Bretton Woods Conference. So they all have been established to make sure that after the World War II, we will be able to rebuild the global financial system. So where World Bank was established, first of all, the objective have been given to World Bank that what you have to do, you have to make stability in the EU. So in the European Union, it was said that World Bank have to work towards in these countries and make them help to redevelop or to reconstruct themselves, and that objective World Bank have completed. After that, the work that have been given to World Bank was that you have to help the member countries in their development, in their reconstruction, as well as in their poverty alleviation. So these are the objectives why World Bank is working. And World Bank is not working alone. World Bank have its group which consists of 5 institutions. IBRD, International Bank for Reconstruction and Development, IDA, International Development Association, IFC, International Finance Corporation, MIGA, MIGA, Multilateral Investment Guarantee Agency, and the 5th one is ICSID, International Center for Settlement of Investment Dispute. These 5 institutions are the World Bank Group institution. They all are working with the same objective to make sure that the country will be developed, the country will be reconstructed, and the poverty will be removed from the member countries of World Bank. This is what World Bank is doing. IBRD is known as a lending arm of World Bank because it provides loan to the poorer countries. Second, IDA is known as soft loan window because it provides loan at a concessional rate or no rate of interest for a longer period of time with the grace period as well. Okay, IFC, International Finance Corporation, provides loan to the private entities of your country, of the member countries. MEGA provides the investment guarantee. It's a kind of insurance or guarantee agency that provide guarantee to the investment in those countries which have risk for the investment. Let's say XYZ countries there where there is a money laundering or terrorism activities or certain kind of things are happening. So nobody obviously want to invest in these countries, but World Bank have that country as its member country. So it's the responsibility of the World Bank to make that country develop. So the World Bank says the other countries that you have to invest in this country, in this particular sector if you want. If you want, we will be giving you 90% guarantee of your investment amount. Let's say you have invested because the World Bank has suggested, and something wrong happened to your investment, to your company, then 90% money will be returned by the World Bank. And that work is done by MEGA. Next we have ICSID. It works as an arbitration. What is arbitration? It provides settlement for the disputes that have happened in the member countries or the countries who are doing trade together or something else. So this is what the World Bank and its 5 organizations are doing. Now, if I talk about IMF stands for International Monetary Fund. International Monetary Fund is a twin sister of a World Bank, but they are working together. Not together, but totally in the different objectives, because IMF provide loan to its member country, or it helps its member country. In what case? In the case where you will find that the country is facing economic crisis, or the country is facing what we can call it economic crisis, or you can call it countries facing balance of payment crisis. So to overcome the country from balance of payment crisis and economic crisis, IMF works there, and IMF give loan to the country like it did to India in 1991. Okay, apart from that, if we talk about IMF, it also gives the policy suggestions to the member nation, like what should be done next, where should to invest, and what changes should be done in the monetary policy of your country. This is what the IMF do. And IMF is a single institution. It do not have any group. It is a single institution working alone. Okay, so this is the introduction of the chapter. Now we will be starting the MCQ. So first, let me know, I guess everything is clear about World Bank and IMF to all of you. Right, now next, let's just start with the questions and be very active in the session so that each and every answer you will be able to give. So this is your first question. The IMF approves the creation of a given amount of new SDRs. These SDRs are distributed among the participating countries on the basis of their dash. Achha, when we talk about any international organization, do remember, let's say if your bank is providing loan to certain customer, how your bank is capable of providing loan to certain customer? Because your bank is simply accepting deposit from one person and giving loan of that amount to the another person. Similarly, international organization does. If any country wants to become their member, they have to contribute a certain amount of money. It means those countries have to contribute a certain amount of money, and that money will be used as providing loan to the other nations. And if you want to become the member of IMF, you have to give a certain contribution to the IMF to become member, and that quota will be decided for the country, like how much you have to contribute in IMF, and that contribution will be in the form of SDR. What is SDR? Special drawing rights. It's an international reserve asset that was created by your IMF. Now this SDR is used to be known as the value of gold dollars. Earlier it used to be dollars, then it was converted into gold, like the value of the SDR was denoted in the gold. That was equivalent to the US dollar, certain amount of US dollar. But now we have SDR as a basket of currency. It have 5 currency in it: US dollar, euro, yen, pound, and renminbi. These are the 5 currencies which are your SDR. And the latest currency added is renminbi, that's from China. So if you want to contribute, distribution should be done as the basis of, or on the basis of your quotas in the IMF. Clear? So special drawing rights will be decided on the basis of quotas in the IMF of a country. Second question, when did India became a member of IMF? Achha, one more thing important is there, that India is a founding member for World Bank and IMF. India is what? It's a founding member. Because Britishers was there in the country, and when the World Bank and IMF was formed, India was the founding member for both the international organization. Apart from that, in the World Bank group, India is the founding member of IBRD, IFC, IDA. India is the founding member of these three institutions of World Bank. Apart from that, India is member of MEGA. It's not a founding member of MEGA, but just a member of MEGA. And ICSID, if we talk about, India is not a member of ICSID. Okay, so do remember, India is a founding member of World Bank, IMF, IBRD, IDA, IFC. These 5 institutions. Okay, now next. So India became member when the IMF was established. That was 1945. So right answer will be A. Next question. Next we have, which of the following are the main function of International Monetary Fund? The main function of IMF. Out of these, what do you think, which of the following is the main function? First is saying purchasing short-term foreign currency liabilities of the member nation, exchange rate regulation, deciding fiscal policy of a country. So if you remember, we have discussed in the paid sessions also that there are 2 types of policy that will be created in the country, that is fiscal policy and monetary policy. Fiscal policy formulated by whom? Ministry of Finance, Government of India, and monetary policy is formulated by RBI. Okay, so it's very obvious the third one is not correct. So the function of IMF is 1 and 2. So your right answer is A. Okay, fiscal policy will always be created by the nation's government. So right answer is A. Next, an IMS, that is International Monetary System, it is considered good if it fulfills the objective of dash. Objective of dash, these are 2 statements have been given to you. Out of these, you have to tell what objective have to be fulfilled by International Monetary System to be known as a good monetary system. A, B, C or D. First, maximizes the flow of foreign trade and foreign investment, leads to an equitable distribution of gains from trade among the nations of the world. And I think both are true. Both are the objectives of International Monetary System. If these objectives have been fulfilled, it means very obvious you have achieved your objective. So right answer is your both. Now you have a good International Monetary System. Next, IMF reviews members' quota once in every dash. So in certain years, IMF have to review the member quotas, like the nation's quota. When you contribute in IMF to become the member, that will be in a certain years it will be reviewed. Similarly, the SDR value will be reviewed in a certain year, so that if any new currency have to be added, it will be added. And if any currency have to be removed, it will be done by the IMF. So that duration is once in 5 years. Once in 5 years, the quota as well as SDR both have to be reviewed by IMF. So right answer we have is D. Next, which of the following statements are correct? And you have these 2 statements. Out of that, you have to answer which is correct. It is talking about the relation between India and IMF. First is saying India has been borrowing from IMF through the financial transaction plan due to critical balance of payment situation. Second is saying India also contributes to the IMF through the extended first fund facility. So what relation is there? So also remember, India have taken loan from IMF last in 1991. Okay, after that till now, India haven't taken again loan, and it is good for us that we do not need in the future as well. So the right answer here is none. No, none of the above is the relation between India and IMF. Also, right statement is none of the above. Okay. Clear? Let me know, is it clear to all of you? Okay, so I guess it is clear to all of you, right? So now let's start with the next question. Let's move to the next question, that is asking about the highest percentage of World Bank total loan have been made for the development of which of the following sector. So we know World Bank gives loan for the development of your country, for each and every sector of the country's development. Whichever sector needs development, World Bank give loan to those sector. Now out of these, industry, agriculture, energy and transportation, out of these 4, the total loans highest percentage have been given in which sector? Is it industry, is it agriculture, is it energy, or the transport? A, B, C, or D. What do you think? Which of the following is correct? And the right answer will be your energy. The highest percentage of the World Bank total loan have been given to whom? It have been given to energy. So right answer is C. Next, which is not one of the basket of 5 currency used in SDR valuation. So SDR, you know, special drawing rights it is. It is international reserve that have been created by IMF in 1969. Okay. And I have told you it is also known as basket of currency because 5 currencies it is. It covers 5 currency, out of which of the following is not? US dollar is there, Japanese yen is there, Chinese renminbi is there, but not the Canadian dollar. Only US dollar is a part. So US dollar, euro, yen, pound and renminbi. These are the 5 currencies, not the Canadian dollar. So that's why your right answer will be B. Okay, and the latest added currency is your renminbi that have been added in October 2016. Next we have World Bank consists of which of the following? So you have certain international organizations name here. So World Bank is a group, as I have told you. 5 institutions are there. Which of the following is not a part, or which of the following is consist under the World Bank? IFS, IFC, IDA or IMF. As I have told you, IMF is the single institution. It has no group. It's a single institution. So your right answer will be 1 and 2. It means A is the correct option. Right answer will be your A. Next question we have here. The Dash is the largest development bank in the world. It offers financial solution and policy assistance to nations in order to help them eliminate poverty and spread the benefits of sustainable growth to all their citizens of country. So which World Bank, WTO, GATT or IMF? Out of these, which bank is the largest development bank? Now let's check what are the offerings of the bank. It offers the financial solution and policy assistance to the nation and also help them to eliminate the poverty. Okay, and also make sure that the sustainable growth of all their citizens will be done. So it's very obvious IMF do not work to eliminate the poverty. GATT have been replaced with WTO in 1995. It means it is working for the international trade, for the foreign trade rules regulation. So the right answer will be your what? World Bank. World Bank is actually working to eliminate the poverty as well as to have a sustainable growth in the country. So your right answer will be D. Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. How are you all? So welcome to the channel again, and those who have joined us here, do let me know as audio video both are okay, are we good to go? And let's start the session. In this particular session we are going to talk about your IFS. As you know, we have already started the Achiever series from 4th of December and this is your 8th class. It means we have discussed 7 sessions in which we have completed 7 units of your module A. So every day we are discussing one particular unit of your IFS subject at 7 PM only on Officer Study 24/7 Monday to Saturday. So do not forget to join these sessions on the regular basis. Okay, and if you haven't seen any previous sessions, then do not worry about it because all the sessions are available in the recorded form in the playlist. So you have to just go to the Officer Study 24/7 channel, go to the playlist, you will find the playlist and from there you can check each and every session's recording. Okay, so do make sure you check that, and in any particular session if you find any doubt you can ask in the comment section because I regularly check the comments of the sessions, and if you have any doubt I will let you know. I will make sure that your doubt will be clear there. Okay, so let's start. So as you can see, this is your 8th class of IFS, in which every day I tell you what topic we are going to discuss. So first of all, if we talk about the IFS subject, you have 4 modules and these module covers 45 units. Out of 45 units, your module A cover 11 units, and from out of 11 units, today we are going to cover the 8th unit. Okay, so do make sure you check the previous session as well. Now today's topic will be your foreign trade policy, foreign investment and economic development. This is your unit number 8, module number A. That what we are going to discuss here. So as usual, before moving to the MCQ, let's have understanding of this particular chapter and then we will move to the questions. And before that, I will be your mentor for IE, IFS and PPB sessions for JAIIB May 2024 English medium sessions. If I talk about IE, IFS session, it will be available at 7 p.m. Monday to Saturday only on Officer Saturday 24/7. If you are looking for a PPB session, that is available at 6 a.m. Monday to Saturday only on Officer Saturday 24/7. And both the playlists are also available and they all every day they are keep updating. So if you want to check any particular session, you can check from the playlist. Okay. Now, let's start. First is FTP. FTP stands for Foreign Trade Policy. It can also be called Export-Import Policy. It can also be called Exim Policy. Now, what is it? As the name suggests, foreign trade policy. It means it's a policy which is related to foreign trade. Now, then what is foreign trade? Foreign trade is the simple exchange of goods and services among the countries. Or you can call selling and purchasing of goods and services among the countries. Or you can call it export and import of goods and services among the country. Or we can say when there is a cross-border transaction of goods and services among the countries, that is foreign trade. So all these are the foreign trades. Exports means selling goods to abroad. Import means purchasing goods from abroad. And when we purchase these activities, that is known as foreign trade. Now, in any country, the exports should be more than the imports. Reason, because if you have more exports, it means you are earning more money in your country and you are spending less money to the other countries. So when the exports are more than import, it's good for the economy. If I talk about Indian economy, the last time we have seen that our exports are more than the imports, that was the time of pandemic. After 17 years of gap in the pandemic, we have seen our exports increased the imports. Otherwise, always every year the imports are higher than the export. Now, why in the pandemic exports were higher than the imports? It's not because we started selling more goods to abroad. It was because of the lockdown, the raw material or everything have been imported less. As well as the people were not demanding goods and services because they were not having jobs, or if they are having job, they are not getting properly paid. So the demand of the people was also decreased. And because of this, the export increase. So it's not like we have started selling more goods to abroad. It was because we have reduced importing goods and services from abroad. And that's why after 17 years, our foreign trade have been increased. Okay, so this was the reason. Now, let's move forward and talk about foreign trade policy administration. So, obviously, the government of India formulated this policy under the Ministry of Commerce and Industry. The Ministry of Commerce and Industry also have a particular act to look after the foreign trade policy, that is Foreign Trade Regulation and Development Act 1992, under which the government of India have created a post that named as the Director General of Foreign Trade. Now, this Director General of Foreign Trade is responsible for implementing and for evaluating the foreign trade policy. Then the DGFT, Director General of Foreign Trade, will get help from Central Board of Indirect Taxes and Custom, that is CBIC, from RBI and the State Department. And this is how the administration works. And if you are looking for a hierarchy, first of all, there will be a Government of India who will make the foreign trade policy. Then second, under Government of India, you will find the Ministry of Commerce and Industry. Okay, under Ministry of Commerce and Industry, you will find the Foreign Trade Regulation and Development Act 1992, under which you will find Director General of Foreign Trade, under which Director General of Foreign Trade will get help from Central Board of Indirect Taxes and Custom, from Reserve Bank of India and State Departments. So this is how the administration of foreign trade policy will be done in the country, or this is how it is done in the country. Okay, now foreign trade policy always be made for 5 years. The last foreign trade policy we have 2015-20. It is updated now because the 5-year have been completed. Because of the COVID, this 15 to 20 policy have continued till 2022. But after that, the new policy have been introduced. But we have to study the policy that have been given in your book by the IIBF, and that is Foreign Trade Policy 2015-20. If IIBF wants us to cover the updated foreign trade policy For that, IIBF will give a certain notice in which it will define us that this foreign trade policy you have to study, like it have done in the last paper. In October 2023 paper, before the examination, I think 1 month ago, IIBF have given us a notice in which all the 4 subjects updations have been given. If I talk about the IEIFS, you will find InvITs and Real Estate Investment Trust. These 2 got their minimum investment limit updated by the government, and that's what IIBF have given us in the notice, that this is what you have to study, not the old one but the new one you have to study. But IIBF haven't talked about foreign trade policy in that notice, so maybe possible in the May 2024 paper it will be updated or it will not be. So we have to cover whatever is given in the book. If IIBF said in the upcoming notice that this you have to cover, we will do that. Okay, so this is the information for all of you about the foreign trade policy. Now let's move to the foreign investment. Now what is foreign investment? It simply means investment to the other country. When you invest your funds, your money, your manufacturing plant, whatever, in the country not yours, that is the foreign investment. The way to do the foreign investment, we have foreign direct investment, FDI, we have foreign institutional investment, FII, we have foreign portfolio investment, FPI, we have ADR, American Depository Receipt, we have GDR, Global Depository Receipt, we have IDR, Indian Depository Receipt, we have ECB, External Commercial Borrowing, etc. All these are the ways by which foreign investment can be done. It means you can invest from one country to another. From India to abroad, investment can be done. From abroad to India, investment can be done by using these instruments that we have discussed. So when you are going to study the conceptual study of this particular chapter, then you will cover each and every investment that I have told you till now in the detail. Okay, now let's move forward to the economic development. Now what is economic development? So to understand the economic development, let's first talk about the economic growth. Economic growth means simply increase in the national output of a country, or I can say increase in the production of goods and services in the country. So when your country's goods and services are increasing, the production of goods and services is increasing, that increases your GDP, and when your GDP increases, it increases your economic growth. Now because of this increase in your GDP, because of this increase in your economic growth, if you will find the positive changes in the economy, that's your economic development. What are the positive changes? Let's say your production of goods and services is increasing. Second, let's say because of this you have more employment opportunities. You have increased your per capita income, country's per capita income. Because of that, the literacy rate in the country have been increased. Because of that, the poverty have been reduced. Because of that, the infrastructure development have been increased. Or because of that, you can say the living standard of people became high. So if because of the increase in the production level of the country, any of these positive changes you are seeing, that's your economic development. So we can say economic development equals to economic growth plus economic welfare. So economic growth represents the increase in the production level, and economic welfare shows the positive changes in the economy. Okay, so this is the basic understanding of your foreign trade policy, foreign investment and economic development. Now let's move forward to the MCQ, and you have to keep answering the option, correct option. And if you are watching recording of this session, do let me know in the comment section how many answers you have given correct. First, dash is an investment fund that is based in a country other than the one where the investment is made. Forex, FII, foreign trade investment, or none of the above. So you are investing not in your country but in the other country. What type of investment it is? So it's very obvious, FII. Forex means the exchange of foreign currency. Forex is what? Foreign exchange. Foreign exchange is what? Exchange of currency. Second, foreign trade investment, you are investing in foreign trade. So if you are investing in the other country, not where you are, that is known as FII, foreign institutional investment. So right answer will be your B. Okay, the second question is asking about a dash is a financial investment made by a company or individual in another country's business interest. What is it? FCI, FDI, SEZ or FTI? Which of the following is it? Correct. A dash is a financial investment made by a company or individual in another country's business interest. It's very obvious, it's your FDI, foreign direct investment. Hai? So you are doing investment in the other country's business interest, that is your foreign direct investment. So option number B is correct. Next question. Which of the following is the vertical FDI form? So FDI we know, foreign direct investment. Now FDI can be in a, FDI is divided into certain forms. So they are asking vertical FDI. So this is what the vertical means. If you are talking about the form of vertical FDI, it will go from backward to forward, right? So it means your types will be backward and forward. So right answer is A. There is no straight vertical FDI, backward and forward it is. So right answer will be your A option. Okay, next. More expansion of foreign direct investment can boost dash. If you are expanding your foreign direct investment, it will boost which of the following? The money circulation, the demand, the employment, the unemployment. So if it's very obvious. If your FDI is increasing, it means more capital is coming to India. It means more businesses will start. So the first impact you can see, your employment will increase. Because of the employment, after that you will see the money will be increasing. And then because of the money, the demand will be increasing. But if you have more FDI in the country, it will expand your employment generation opportunities. Okay, so right answer is C. Next. FDI in India is allowed in two modes. First is government route and the other one you have to tell which of the following it is. So if anyone or any countries, from any country or from anybody, if we want that they invest in our country, or they will take FDI in our country, there are two modes. First is government approved route. The government approved route means the prior approval is required before investing in the country. If you want to invest funds in India, you can do that, but before that, you have to take prior approval from the government under the government approved route. And the second method is the method where the prior approval from the government is not required. And if the prior approval is not required, it means it is automatic route. Okay, in government approved route, you have to give notice to the government that we want to invest in India in this particular sector with this amount of money. We want to introduce the FDI in the country. If government accepts that letter, you can come and invest in the country. Okay, that's the government approved route. In automatic route, you do not have to take the prior approval of the government. But yes, after investing in India, within 30 days, you have to inform the same to the RBI, Foreign Exchange Department. Okay. So the next method is, so the other method is automatic route. A. Next. In foreign trade, an adverse balance of trade occurs when? Which of the following happens? So we have discussed foreign trade policy. We have discussed the balance of payment. Balance of payment simply is the systematic record of all the economic transactions between India and rest of the world. That's your balance of payment. What is balance of trade? It means balance of trade is a part of your balance of payment which covers the export and import of goods. And if it is adverse, adverse means negative. It means unfavorable situation. You can call it deficit balance of trade, unfavorable balance of trade, negative balance of trade, or the adverse balance of trade. It will be there when you will find that in your country, the import is more than export. Because if you are importing more, it means money is going from India to abroad. And that will create a negative impact on balance of trade. So right answer will be your B. Now, FDI decisions are affected by which of the following? Government policy, political stability, state of economic development. So FDI decisions are affected by which of the following? So it's very obvious. The question is asking like if any of these decisions have been changed, will it affect the FDI decision. Like if a foreign company wants to come to India for the FDI investment, will government policy, political stability, state of economic development changes impact the decision of the company? Yes or no? If yes, then which of the following? And I would say all of the above. Reason, if government policies have been changed, taxes, duties or restrictions have been introduced by the government, it will become hard for the foreign company to work in the country. Political stability. If your country do not have political stability, let's say the government of your countries keep changing after 6 months. So obviously your policy will keep changing after 6 months. It will not attract the foreign direct investment. The state of economic development. If you want a manufacturing unit should come to India, then you have to provide 24/7 water facility, 24/7 electricity facility, all weather road connectivities, etc. The basic infrastructure that you have to give now. But if you do not have that basic infrastructure, no company will want to come India. It means all of these decisions will affect the FDI decision of a foreign company. Okay, so right answer is D. Next, FDI from Pakistan is placed under. So I can say by checking the name of the country, you can easily decide what type of route will be allowed. Automatic, government or both or either, and it's very obvious government approved route. Without government's approval, no company from Pakistan can invest in India. So if FDI, someone wants to take from Pakistan to India, they have to take prior approval of government. Right answer is B. Now FDI limit in private banking. It means private sector bank. How much FDI is allowed? Apart from that, also let me know in case of public sector. So let me know in case of public sector bank, payment bank, small finance bank and private sector bank, what percentage of FDI is allowed in all these categories? Okay, and the right answer is for private bank is 74, same for the payment bank, same for the small finance bank. But for public sector bank, it is only 20%. Okay, so this is the FDI amount or FDI limit in the different banking sector. Do remember each and every of these. In the October 2023 paper, they have asked about the FDI limit for insurance intermediaries, not insurance companies, but the insurance intermediaries. So do let me know in the comment section what is the FDI limit for insurance intermediaries right now. This question have been asked in the October 2023 paper. Now foreign investment, foreign portfolio investment is the investment by dash in foreign financial instrument. So who can make the investment in the foreign portfolio investment? Individuals, firm, public bodies or any of the above. Who can make investment, foreign portfolio investment? A, B, C or D. And the right answer will be D, any of the above. Any of the above can do the investment in foreign trade policy. Okay, so right answer is your D. Good evening everyone, welcome to the official YouTube channel of Officer Survey 24/7. How are you all? So welcome to the channel, and in this particular session we will be discussing about IFS, the first paper of your JAIIB May 2024 paper. So the first paper is Indian Economy, Indian Financial System, and as you know we have started the Achiever series in which every day we are discussing one particular topic of your module A. So we have started from the module A, then B, then C and then D. This is how we are going to cover the whole series of your JAIIB IFS subject. So let's start. If you talk about today's session, this is our 10th class. It means already 9 classes have been completed. It means 9 units have been completed. So in this particular session, we are going to talk about the climate change and sustainable development goals. So this is your unit number 10. Okay, this is what? This is your unit number 10. And for module A, so if we talk about IFS, there are total 45 units, 4 modules, and out of 45 units, only 11 units are there in your Indian economy, Indian financial system. Okay, so that is the second last unit of your module A, and after that we will be starting the module B. So let's start. Acha, before starting with the MCQs, first of all, I will be your mentor for IE, IFS and PPB for your JAIIB exam. That is your paper 1 and paper 2. Apart from that, these sessions are going on regular basis at 7 p.m. only on offices at 24/7, Monday to Saturday. And apart from that, the PPB sessions are going on in the morning at 6 a.m. for the same time duration, Monday to Saturday. Okay, so do make sure you are joining these session, and in any particular session, if you find any doubt in the session, do let me know. I will be checking your comment and answer there. So do drop a message if you have any doubt. And after the end of the every session, do let me know how many marks you are getting in the particular session. Okay, so let's start today's session. When we talk about climate change, what actually is climate change? So earlier we used to read about this climate change only. Like, what is climate change? We used to heard about this and we used to read about this in the news, that global warming is happening and this is happening and that is happening. But now this is the kind of thing that we can actually see in our country as well as in the world. So without a season, when you see a flood, when you see a heavy raining, when you see heat waves, when you see a more and more cold or hot season or etc., these are the climate change. So what is climate change? Climate change simply means when there is a long-term changes in temperature and weather. That is known as your climate change, and that's we are actually facing. Not only India, other countries are also facing the same situation. So this is your climate change. And how to overcome this? It's not possible that one or two countries will be able to overcome this situation. Not possible. All the countries are facing this situation and all together have to fight with this situation, and that's where we have introduced the climate action. And the climate action is one of the goal of your sustainable development goals, that is telling us, or in which we are discussing how we can stop, or not to stop, but how we can control this climate change. So climate change simply is the long-term changes in weather and temperature. That's your climate change. And to overcome the situation, we have done a lot of conferences, like COP26 happened, that is Conference of Parties 26, and similarly a lot of commissions and committees and the governments are working towards it. But it's not possible that if all the countries come together and talking about certain rules, regulation, certain ways to do their business or certain ways to control this situation, we have providing them, but this is not sufficient. Reason? Because it needs much more than that. Why it needs much more than that? Because you will find out that whenever we talk about your climate change, this is somehow affecting each and every person, each and every business, each and every sector, each and every industry, each and every country. So that's how each and every person have to contribute towards it. Like the Swachh Bharat Abhiyan, we have introduced Swachh Bharat Abhiyan, and it's not the government will go city to city, villages to villages, state to states, and then make India clean. Not possible. It's us, it's the public who have to participate, and this is only us who can make it happen. So government can give us the target, government can make the strategies, the policies, the schemes that this should be done. But at the end, all these together comes when we actually as a citizen start working on that. So if we want to have a climate change problem resolved for the country, then we have to take certain actions. We have to participate in the climate action. So climate action is the 13th number goal that is under the Sustainable Development Goals. Climate action. The climate action is the 13th number goal we have in the SDG. 13th number goal, it means SDG have total 17 goals. Out of that, the 13th number goal we have is climate action. And it's very important. It will definitely be there in the paper. Now, first of all, let's talk about SDG. So, United Nations General Assembly is there. And this United Nations General Assembly always work to make peace in the country, to make, not only in the country, in the world, also to make sure that each and every country is growing and developing and etc. And for the same purpose, United Nations General Assembly in 2000 year introduced the Millennium Development Goals, that was the MDG. It started in year 2000 and the goal have been taken till 2015. There was 8 goals in the MDG, and these goals have been given to the developing countries so that they will become developed. And the developing countries were actually following the rules, the norms, the goals. They were trying to achieve the goals and they were actually worked on it. But what happened in the same duration from 2000 to 2015, when developing countries were following the goals, were trying to achieve the goals of the MDG, the developed countries were continuously in a very speed using their resources to become more developed, to become more growth, to have more growth in the economy. And then certain kind of point have been seen, or certain thing have been pointed out by all the countries or by Mahatma Gandhi ji itself. So they said, if you continuously use your resources and in such a way, then what happened with the future generation, how they will survive in the country. So then the word sustainable development came into the picture. And that means when we talk about sustainable development, it tells us that use or utilize your resources in such a way that you will be able to fulfill your needs, but as well as the future generation do not have to compromise with their needs. So in such a way you have to use your resources, because every country were using their resources not as per their need but as per their greed. And that's what we had to change. That was said by the government, the UNGA, Mahatma Gandhi ji, etc. So that's how the sustainable development was introduced. And when the MDG have been stopped or have been completed its periods from 2000 to 2015, we have introduced SDG, Sustainable Development Goal, that was introduced in 2015. It has 17 goals that have to be achieved by 2030. So we have Agenda 2030 to achieve the sustainable development goals. But now these goals are not only achieved by the developing country, but also by the developed country. All the countries have to work on this SDG to achieve this. But somehow all the international organizations reports tell us now that because of the COVID-19 pandemic, it's very hard that India will achieve its 2030 target. So that was the issue we have faced in the country. Now that was the thing that have been said by the international organization. But still we are following the goals of SDG and all the countries are trying to achieve it by 2030. So there are 17 goals and all the goals have to be remembered by its number, because the direct question have been asked on this and it can be asked in the next paper also. So they can simply ask which of the following is the goal number 10, which of the following is the goal number 17, which of the following is the goal number 2. Or they can give you certain numbers, they can give you certain goals. They can provide you industry, innovation, infrastructure. They can provide you clean water and sanitation. They can give you life on land. They can give you, let's say, affordable and clean energy. And they will ask their goal number, or they will ask which of the following is the goal number 15. So you have to remember by number which particular goal stands in one number, which number. So first you can see no poverty, zero hunger, good health and well-being, quality education, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth, industry, innovation and infrastructure, reduce inequality, sustainable cities and communities, responsible production and consumption, climate action, life below water, life on land, peace, justice and strong institution, partnership of further goals. So these are the 17 goals that you have to remember by name. Okay, and we will be having a certain trick to remember these 17 goals, because I know it's a kind of rectification we have to do if you want to remember the goals. But I will give you a short trick that will help you to read this. But for that we have to understand the concepts behind each and every role. Okay, so after understanding each and every goal, motive behind it, I will give you the trick that we will study in the paid classes. Okay, not here, because it will take lot of time to understand the whole 17 goals motive. Okay, so I guess the basic of the chapter is clear. Now let's start with your questions. So the first question is asking about the penalty for non-compliance with CSR provisions are. Now let's first talk about what is CSR. So CSR stands for Corporate Social Responsibility. So what happened now? If we talk about CSR, like every company is using certain resources to achieve their objective, to make sure that they are offering the products to the consumer. Every company is doing that, that we will be able to provide goods and services to our consumers. But somehow when we are focusing on providing goods and services to our consumer, we somehow impact whom? We somehow impacting our society. So that have been said that the companies have certain responsibility towards the society, and that was named as corporate social responsibility. So you have to pay certain responsibility towards the society by doing something good for the environment, and that's how we have talked about the CSR. Okay, now if you have known your bank also doing it, somehow the companies in the CSR, they spend the certain part of their profit on let's say for example plantation, cleaning certain area, providing food to the let's say underprivileged society, or let's say they are going to the old age home, they are going to the orphanage and providing services, they are providing books there to the students, paying fee for the students there. So these kind of things are the part of the corporate social responsibility. Okay, so now if you do not compile with the norms that have been given by CSR, in that situation what happens? First is saying at least 1 crore for defaulting company, at least 2 lakhs for each defaulting officer, imprisonment provisions of maximum 3 years for defaulting officer. These are the 3 penalties in front of us written here. Out of these 3 we have to answer which of the following is correct. So what is the penalty for non-compliance with CSR? A, B, C or D? Okay, and the right answer is your A and B. Why? The reason is because earlier the CSR used to be known as a criminal offense. It used to be taken as a criminal offense. When it used to be the criminal offense, they are used to imprisonment of 3 years. Okay, but now it have been taken as a civil wrong. So in case of civil wrong, it's not a criminal offense, it's a civil wrong, and that's why there is no imprisonment situation. There is only penalty that have to be paid by the defaulting company, that is 1 crore, and by the each defaulting officer, that is 2 lakh. So right answer will be your A option. Right answer we have is A. Now next question is asking which of the following are elements of green finance. Now what is green finance? So as we know, the global warming is not affecting directly to the banking system, but it is definitely going to impact each and every sector of our economy, the growth of our economy, the development of our economy, of all the sectors. So somehow banking sector is also helping in the climate action by providing green finance. When we talk about green finance is a certain type of funding in which whatever funds you collect from the market, you only put that fund in the environment friendly projects. And when the let's say when the bank is providing green finance, green loan, in that situation bank is providing loan to such kind of sectors or such kind of businesses which are environment friendly. Okay, so now you have to answer which of the following is our element of green finance. The banking system, the bond market, the institutional investment, all are the part of the green finance elements. Okay, A, B, C and D all are the part. So right answer will be D here. Now, the Government of India offers dash of the installation cost of the rooftop solar panels as subsidy to the institutional, residential and social sector in the most states. And out of this, which of the following is the correct amount? So when we talk about the solar panels, when we talk about the rooftop solar panels, what are they? Simply, first of all, we are trying to make contribution more of your renewable energy. So we are trying to have renewable energy more and more in the context. So this is why PSL also covers the renewable energy. In the PSL, it has been said by RBI like 30 crores loan will be provided in the renewable energy sector. Out of that, If any individual person comes for rooftop solar panels, then 10 lakh rupee loan will be given to that person. This is the target under the PSA. Now the government says if you any solar rooftop solar panel is done by any party, in that situation whatever the cost of that installation, certain amount of money will be paid by government, and that amount of money is 30%. Let's say your cost of installation is 100 rupee. Out of that you only have to pay the 70 rupee and the 30 rupee will be paid by the government. This is the subsidy that government have given here on the installation cost only. Okay, this is in the maximum state. In some state it's 70 also, and in some state it's 70 also, but in maximum we have 30, so right answer will be A. Next question we have OSOWOG means. What is the full form of this? This has been asked in May 2023, this has been asked in October 2023, so we have to remember this. This is the term that was introduced by Mr. Modi actually in 2021 COP26 meeting that happened in Glasgow. So this is what the OSOWOG have been. That is one sun, one world, one grid. It means we just trying to say that each and every country have to be partnered with each other. We have to be the partner of each and all the country, and so that we will be able to achieve this particular objective. If you want to achieve the climate action situations, if you want to have the climate action worldwide, then you have to be the partner. So this is one sun, one world, one grid represents that all the countries are together to fight this issue, and that's the C option. Now, non-compliance with CSR provision is a dash. So I have just told you, let me know, is it a civil wrong or is it a criminal offense? Which of the following is true here? Non-compliance with CSR provisions is a dash. Is it a civil wrong? Is it a crime? And the right answer will be it's a civil wrong. Hana, what is it? It's a civil wrong, so right answer will be only A. Earlier it used to be the crime, but now it's a civil wrong. Now, as per the World Bank estimates, climate change is likely to lower India's GDP dash by 2050. So, which of the following is true here? The question is asking, as per World Bank estimates, climate change is likely to lower India's GDP by how much? 0.8, 2.8, 3.8, 6.8. A, B, C or D? And the right answer for this question will be 2.8% per year. So you can see how much this climate change is impacting our country. Like every year 2.8% loss we will be facing in the growth of the country. Okay, so the right answer will be your B option, 2.8% per year. It's not like overall 2.8, no. Every year 2.8% loss we have to see in the growth of the India's GDP. Next question is, green bonds are bonds issued by any dash. So green bonds always be a debt instrument. Whenever we talk about bonds, bonds are the debt instrument, right? And when we talk about the debt instruments, whenever you talk about the debt instrument means what? It means what? It simply means that whenever you talk about bonds, debt instrument, it means it's a kind of loan you are taking from the market. Whenever you issue the bonds or debentures and you take loan from the market, and that you have to repay in a certain period of time. So maturity period, rate of interest will be prefixed, you have to pay on that. So this is issued by all of these. Even the World Bank issues the green bonds. So green bonds are issued for environment friendly projects in which you will take fund from the market and it will be utilized only in environment friendly projects. So right answer will be your D. Okay. Now, India aims to achieve the target of net zero emission by which particular year? So, the net zero emission target by which year India will achieve? 2030, 2040, 2050, 2070. And the right answer will be 2070. Net zero emission means we have to stop the use of fossil fuels for our needs, but we have to focus more on the renewable energy kind of thing. Okay, so the net zero emission will be achieved by India by 2070. This is the target have been taken. Now CSR attempts to eliminate dash. The Schedule 7 of your Companies Act defines that CSR tries to eliminate which of the following. And because the CSR is focusing on eliminating hunger, poverty, malnutrition altogether. That's how we can say CSR and Sustainable Development Goals, they are working towards at the same goal. Because the first goal we have no poverty, second goal we have zero hunger. So here right answer will be D. All of these CSR is trying to eliminate. Okay, remember in the Schedule 7 it have been defined. Now next and very important question is there, in which particular section of Companies Act the CSR legal support have been defined? Section 135, Section 235, Section 295, Section 195. Which of the following is your right answer? And your right answer is Section 135. So Section 135 of your Companies Act 2013 provides what? It provides the legal support to the CSR. So your right answer will be A. Good evening everyone, welcome to the official YouTube channel of Officer Survey 24/7. So how are you all? Let me know. Apart from that, first of all, this is our session which we are having every day at 7 p.m. from Monday to Saturday for your IFS, that is paper number 1 of JAIIB. So as we know, in the May 2024 we have our JAIIB paper, and the first paper that we have to give is IFS, second will be PBB, third will be AFM, and the fourth will be your retail banking and wealth management. All the 4 subjects have huge syllabus. The 4 modules are there and around 30 units. Like RBWM have 30 units, AFM, IFS have 45 units, and PPB have 55 units. So a lot to cover, a lot of things we have to do to clear this particular paper, because the paper is tough comparative to the earlier years. The paper is lengthy because the statement based questions are there. The language is tricky, and it was made tricky for making sure that you won't understand the concepts, that you won't understand what question is actually asking for. So we have to make sure like we are reading each and everything properly with the conceptual understanding, having proper revision, focusing on proper practice and all. So these are the only things that we have to do. We have to be consistent in covering the conceptual classes, second revising those, and third practicing questions on that. If you continue these 3 things for the next 3 to 4 months, definitely you will clear your paper in the first attempt. But yes, if there is no consistency, somehow you are covering the paid classes, you are covering the conceptual classes, but you are not properly doing revision, you are not properly giving topic wise test, then there is a chances that somehow we can lose in the paper. So do not take this risk. There is a paper we have to give, and we already know, we know already that in May this paper is going to happen, and we have to give this paper, and we know we need minimum 50 marks in each and every subject. So what we are waiting for? When you already know everything what is going to happen, then prepare for it. Okay, so that's why we have already started these Achiever series for you for all the 4 subjects of JAIIB. The Achiever series will be available for your English medium batches, English medium, for the candidates who are not good in the bilingual, in the Hindi language. So for them, these English medium Achiever series have been started. And for those who want a bilingual session, there is a Lakshya series available. So you can watch either of them with whatever language you are comfortable with. So now if I talk about IFS, we have started this session, and today it's the class number 11. The class number 11, when we are talking about, that's your last unit of module A. So module A we have covered wholly. So full module A we have covered, in which each and every day we have discussed one particular unit. So today this class number 11 will cover your all the units of module A, and the last unit of module A is unit number 11, that named as Issues Facing Indian Economy. Clear? So here today we will be ending our module A of IFS by covering 11 units of module A. Clear? Now, so first of all, before starting the session, before moving forward, I will be your mentor for IFS and PPB, that is your paper 1 and paper 2. If you want to check the Achiever series for PPB, that is available at 6 AM Monday to Saturday. And if you want to check IFS other sessions also, Monday to Saturday, these sessions are going on in the evening at 7 PM. So do make sure you are joining both the session. It is very important. Okay. Now, before moving forward to the questions, now let's start with the understanding of the chapter, like what this chapter is talking about. As the name says, issues facing Indian economy. This whole chapter talks about what issues the Indian economy is facing. Now, if we talk about Indian economy, a lot of issues we are facing. If I talk about the major shocks which somehow affect the growth of the economy, we have such 3 shocks in the country. That is 3 major shocks in the economy in the last 4 decades. The first one was balance of payment crisis that happened in 1991. So the first major shock we have faced was balance of payment crisis that happened in 1991. And because of that, we have introduced the LPG policy. And that was your balance of payment crisis. It means the inflow was less in comparison to outflow. And that's how the balance of payment crisis have been seen. The second major shock that we have seen, that was global financial crisis. So this crisis started from USA, but somehow it affected all the countries in the world. Reason behind it? Because all the countries are interconnected and dependent to each other, because we have started cross-border transaction of goods and services, of culture, of skills, of knowledge, of resources, of everything. That's why the USA's crisis affected all the countries in the world. It impacted India as well. Okay, and the third major shock that we have faced was your COVID-19 pandemic that all the country in the world have faced. So COVID-19 pandemic also was a major shock for the economy, and it was also said by Reserve Bank of India, like still we are struggling to come over from the effect of your COVID-19, and we have to face this effect till 2034-35. That was a statement of Reserve Bank of India, that India will be keep facing loss in the economy or keep facing problems in the economy due to COVID-19 till 2034-35. That was the RBI said. Okay. Apart from that, inflation is rising. That's one of the major issue in the country, that continuous inflation is rising, because if inflation is rising, it's increasing your cost of living. If your cost of living is increasing, somehow people's demand will decrease in the future, and so does the production, GDP and growth as well. Because let's say, for example, to fulfill my basic needs in 1 month, I need 10,000 rupees. What are my basic needs? Food, shelter, clothes, primary education, clean drinking water, etc., etc. So to fulfill all these basic needs in a month, I need, let's say, 10,000 rupees. Now, because the inflation is rising, prices are rising. Now I need 20,000 rupees in a month to do what? To simply fulfill my basic needs. So the way inflation is rising, my salary is not rising accordingly. So it means the value of money I have is decreasing. So it means I have to somehow compromise with certain needs of mine or certain wants of mine so that I can survive in the economy. For that, I will reduce the demand of goods and services which I do not actually necessarily needs. So that's how I will decrease my demand. That's how the production will decrease. That's how the GDP will decrease. And because of all these, you can see economic growth of the country will increase. So this is one of the reasons. Apart from that, we have a jobless growth in the country. This is one of the major reason or major issue. What is jobless growth? When in your country, you can see your GDPs keep rising, but people are not getting employment. No, there is no changes in the poverty level. Poverty level is increasing. Unemployment level is increasing. But your GDP is also increasing. It means that's a jobless growth. So you are keep producing goods and services. Your GDP is increasing, but you are not creating any jobs for the people. You are not providing income to the people. You are not making their livelihood better. But yes, your production is increasing. That's your jobless growth. Okay, so these are the certain basic major issues that Indian economy is facing. Now let's move forward to the questions and discuss what are the content. What is the content we have to study in this particular chapter? So the first question in front of you is this. Dash due to advent of a new COVID variety are undermining manufacturer confidence. Cost pressure from increasing energy. Then raw material prices, drop in demand, 1 and 2, 1 and 3, 2 and 3, and 1, 2, 3. So simply question is asking dash due to the advent of new COVID variety are undermining the manufacturers' confidence. So because of the COVID-19 variety, we have seen the manufacturers' confidence was losing. Hana, they were thinking that there is no need of producing more goods and services because people will not demand in the future. So which of the following is it? A, B, C or D? A, B, C or D? And the right answer for the same will be there was a drop in demand, there was raw material prices increasing, there was cost pressure from increasing energy. So right answer will be your D, that is all of the above 1, 2 and 3. Okay, so your right answer will be D. All was there, and all these three situations we have seen because of what? Because of the new COVID variety. Okay, all these have been faced by the manufacturer. Now next question is asking, according to IMF, what is IMF? We have studied, it is International Monetary Fund. It's an international organization which helps its member country in the economic crisis or balance of payment crisis situation. So according to IMF's April 2022 report, World Economic Outlook, the Indian economy would grow by dash in fiscal year 2023 before slowing down to dash in fiscal year 23-24. So what actually the IMF said about your Indian economy? Like what growth will be there in 22-23 and what growth will be there in 23-24? So it's very obvious the 22-23 growth will be high comparative to 23-24. So which of the following is it? And the right answer is your D option, because the IMF said it will be 8.9% in 22-23 and it will drop to the 6.9% in 23-24. So your right answer will be your D option. Okay, do remember this. This is for 2020-23, 23-24. And this is the estimation. Whenever you see now that IMF have said this growth will be there in 22-23, in 23-24, in 24-25, all these are the estimations. Not only IMF but also World Bank, ADB, AIB, NSO, the central government of yours, they all estimate these kind of growth, the future growth of your countries. Okay. Now, as per Planning Commission, that was the planning body of our country, established in 1950, 2011, 12% of population below poverty line in rural areas. It was more comparative to your urban areas, and very obvious why. Because in rural area, we have less resources, we have less options for the job and etc. for the people. So the question is asking, as per Planning Commission estimates, the percentage of population which is living below poverty line in rural area was 13, 20, 25, 37. And the right answer will be your 25%. That is option number C. Okay. So do remember 25.7% was there in the rural area and 13.7% is there in the urban area which are living in the below poverty line. So right answer is C option, and for urban area it will be 13. Next question. RBI supports the economic growth through which of the following? Supply side factor, demand side factor. So if you remember, the RBI makes monetary policy. Okay. Monetary policy have an objective to maintain the price stability in the economy. And to maintain this price stability, you can find out that RBI is doing what? RBI is simply making it sure that the money supply will be proper in the economy. So, RBI changes the policy rates. Sometimes RBI increases this policy rate, sometimes RBI decreases this policy rate, because it increases money supply and it decreases money supply in the economy. Okay, so whenever RBI increases policy rates, your money supply will be decreased because loans are becoming costlier. Whenever RBI decrease the policy rates, the money supply will increase because your loan became cheaper. So this is how RBI changes the money supply. Now, as per the money supply available with people, their demand will decrease or their demand will increase. If they have less money, their demand will be less. If they have more money, their demand will be more. It means very obvious, RBI supports the economic growth on the basis of your demand side factor. RBI cannot say the manufacturer to start manufacturing or to start manufacturing of this much amount of goods or that much amount of services. No, RBI cannot order the institution, the manufacturing units. It can be done by Government of India only. So how RBI will be performing, or how RBI will be helping us out in the economic growth of the country? By creating demand in the market. So when RBI decreases the policy rates, people have more money supply. When people have more money supply, they will demand more goods and services. When they demand more goods and services, you will be producing more goods and services. When you produce more goods and services, your GDP will increase. When your GDP increases, automatically your economic growth will increase. So what RBI is doing? Simply demand side factors. So the right option will be your B option. Only two. Okay, so RBI helps with the demand side factor and Government of India helps with the supply side factor here. Next. Jobless growth can be caused by a variety of economic factors that include, in a growing economy, a structural factor, stringent labor laws, a strong reliance on capital intensive industries. So question is asking, the jobless growth can be caused by a variety of economic factors which include which of the following? A, B, C or D? So which of the following is true? Okay, and the right answer is all of the above. All of the above are there that caused by that are the economic factor because of which jobless growth have been seen. We have structural factors, the stringent labor laws are there, strong reliance on the capital intensive industry we have. So right answer is your D option, all. Okay, now as per RBI's report on currency and finance 2021-22, it will take India more than dash to recover from COVID-19 losses. So I have told you the year, that RBI have given under its report, that was 2034-35. By this year, India will be recovering from the COVID-19 losses. Okay, but how many years? That is 13 years. So according to RBI, India will take 13 years to recover from your COVID-19 losses. So right answer we have is B. Okay, next. Migration is often outcome of a series of factors that are worsened by changing environmental condition as well as developmental and demographic situation. What are those factors? So migration means when the people started leaving from first place and shifting to the another. Let's say when people came from rural area to urban area for having a better livelihood, for having a better resources to live or making their life better, having a good living standard. For all these purpose, when the people are shifting from rural area to urban area, that's the migration. We also have a reverse migration. Reverse migration means people from urban area going back to rural area. And this happened at the time of pandemic. What happened? Lockdown was there. Those people who came to the cities, who came to the urban areas to earn or to get a better opportunity to job, they started going back to their villages, because at the time of lockdown they were not able to survive, they were not able to pay their rent, and the landlords had made it worse for them to live there. So they started going back to their homes. That's the reverse migration. So what factors are these which create this situation for the people that they do migrate from one place to another? Is it economic factor? Is it social factor? Is it political factor? A, B, C or D? Which of the following is it? Okay. So the right answer is all. There is economic factor, that there is no job opportunities, there is no money in the rural area, etc. Social factor, the particular area have the certain caste living there and the people are not accepting you. Let's say you are living in certain, this happens still. If you are living in a particular area, there is a people who are from the same culture, from the same religion, and you belong to the different, then you cannot survive there, है ना? So that's the one of the reason. Political reason is there. Let's say from wherever from you belongs to, there is a certain religion, the certain caste, the certain culture is there that have been accepted by the people, and there are a lot of people from that particular background only, that particular religion or whatever. And the political sources are also helping them. Let's say, for example, something injustice happened with you. You went to the police station and asking them to help you out, but they are not helping you out because they already have made their ways through the certain religion and the maximum people from that particular group. So like you are fed up from the justice, let's say for example, from the political system there, the parties we are having in that particular area, who are not supporting you, who are not doing justice with you, or let's say for example the political system as well as your legal system. In that situation you can move from one place to another, and the right answer is D. Okay, right answer is D, all of these factors. Now the solution to jobless growth, how to remove this jobless growth issue in the countries. First, encourage entrepreneur instance through programs such as Startup India, Stand Up India, like promote people to start their own business. Reform the education system to develop the desired skill set. Promote labor intensive industries such as food processing, textile. So which of the following is there which help you to remove the jobless growth from the country? A, B, C or D? The solution to jobless growth. A, B, C or D? And the right answer here we have is D. 1, 2, 3. All these can be done to remove the jobless growth from the country. Okay, the solution to jobless growth is to all of the above. Now, India has one of the world's dash growing economies. It also has one of the most dash societies. So you have to answer which of the following is true. The slowest, fastest, there are two options. Equal or unequal, there are two options for both the blanks. So India has one of the world's growing economies. So as per IMF, India is the fastest growing economy in the world. है ना? So it means option number C and DA have been removed, eliminated. Now, it also has one of the most dash society. We have an equal society or we have an unequal society. So it's true that India is right now fastest growing economy in the world, but India also have most unequal society, because you can find out there is a gender inequality, there is a distribution of wealth inequality, there is an income inequality. So a lot of inequalities are there in the economy, and that have been seen in the report. It's not like we are just saying it that there is an inequality in the country. No, as per the reports issued by international organization, we have faced that India is one of the most unequal society. So the right answer we have here is D. Okay, as per IMF World Economic Outlook, April 2022 means the world's fastest growing major economy we have just discussed. Which economy is it? India. India is the most or the fastest growing economy in the world. Okay, so right answer will be A. Now, so this is what we have discussed about the issues facing Indian economy. Now let me know in the comment section how many answers you have given correct. Okay, let me know that. If you are watching recorded session on the regular basis, then do also let me know in the comment section like how many answers you have given correct. And if you have doubt in any session, just do drop your message on the comment section that this is your doubt. I will be checking your comment and answer there. Apart from that, I want to inform you all that we have started the Achievers batch. Now what we have started? We have started the Achievers batch. This Achievers batch started from 8th of December when we had orientation class, and from 11th of December we have started the comprehensive study of your IE, IFS and retail banking and wealth management. 2 subjects have been started. Okay. And there is a Mahapack as well that will provide all the benefit of Achievers batch plus mini and Maha marathon plus your all upcoming batches. This is the benefit of Mahapack. Now, how to enroll? To enroll, first of all, you have to download the Adda 24/7 application. Then go to the home page. Find the exam category, that will be JAIIB, CIB. Okay. After that, go to the JAIIB May 2024. Click on the view all option. Check all the batches here. The Mahapack, the Achievers batch, individual subject batches, everything is available. How to enroll? Just click on the batch. Do read all the details. What are the offerings of the product? You can see the product includes what, the package includes what, that will be given to you. You can find the study plan. 2 subjects have been started. Both the study plan is available. After checking all this, click on the buy now option. And if you use this code, you will get 75% discount. For more than that discount, you have to use the code Y496 and then go to apply. When you apply, you will find here 77% discount. 1% additional discount will be available if you use the coins on the application. Here you will get 78% discount, 9-month validity by using the code Y496. Okay, so this is how you can enroll in any batches. The same process you have to use. And the same code will be applied to all batches. Okay, so this is all for today. Today we have completed your module A of IE IFS. So there are 11 units in module A and every unit we have discussed here. Okay, so this is all for today. If you have any doubt, you can ask in the comment section, you all know. And to join these sessions regularly, first subscribe the Officers Adda 24/7 channel and press the bell icon so that all the upcoming sessions notification will be properly provided to you. Okay. Apart from that, if you have any such kind of doubt when to join this session, so at 6 AM we having PPB session and at 7 PM we are having IEFS session. Both sessions are available live for English medium candidates. So do join them. If you are not able to join the live sessions because you have the paid classes at the same time, then you can watch the recording. The playlist is available on the channel as well. Okay. So this is all for today. Thank you all for joining the session and see you in the next class. Take care everyone.